The reason why you find no success in order blocks is due to the lack of knowledge. Let's talk about order blocks and how we can effectively use them in our trading plan. First things first, in order to not overcomplicate order blocks, we're going to dumb it down. In a bullish argument, in a bullish order flow, every down candle is an order block. And now vice versa. In a bearish argument, every up candle is an order block. Now, let's look at these two examples and let's mark the order blocks. Here, we have 1, 2, 3. We have 3 candles in this push down. Now, we can use all these 3 candles as one single order block. An order block becomes validated when the high gets broken. So here, this becomes an order block. Price continues to push further, comes down, we break the high again. Now this becomes our order block. Now, we do have a couple down candles here. From this low to this high, the reason why we don't anticipate on these order blocks here holding is due to what we have below them. We have a order block that has taken liquidity, is overlapping with the fair value gap. Right? So our higher probability order blocks are the ones that are overlapping with fair value gaps and also take some sort of liquidity. Now, a good rule of thumb is if a wick overlaps with a fair value gap, like here, we use the wick instead of the body. Right? If the body overlaps with a fair value gap, then we use the body instead of the wick. Here, in these two order blocks, there is no fair value gap and there is no liquidity taken, right? And it is not in the discount from this low to this high. Now, if an order block is wicky, so it means there's wicks above and below, we can just use either the whole order block, so the whole candle, or just the wicks alone. If there are no fair value gaps, then we could just use the body. The body, we could use the body if the body is a thick candle. So what I mean by that is here, if we were to use this order block here, and if it had a wick below and no fair value gap, then you could ultimately just use the body. So let's look at the bearish case. So we have this order block, as we spoke about earlier. If we have multiple candles, we'll just treat them as one order block, like this, right? And here we have the body and the wick overlapping with the fair value gap, so it either works in this case. Price comes up here, respects it, pushes price lower. We leave behind another order block here. Price continues to push lower, creating another order block here. As the fair value gap gets disrespected, we assume it will make way to the order block. As price respects the order block, it makes another order block. So the current order block here would be this candle, as the low gets broken, leaving behind a fair value gap. And in this case, we could use a wick. Now we know how an order block looks like and how we can identify an order block. Let's talk about how we can actually utilize them in our trading plan properly. First things first, we need a higher time frame narrative. What is happening on the higher time frame, where we can assume price will go on the higher time frame. To come to that conclusion, we ask ourselves these questions. What PD arrays are being respected? What are being disrespected? What swing highs are getting ran through? And which swing highs are being protected? Here, we can see that we have a daily order block. We have a fair value gap here too. Our swing high is up here. This swing low got disrespected. So to answer our questions, we have an order block that is being respected, or we assume will get respected. We have swing lows being targeted and being disrespected. They're getting ran through. And we assume the bearish trend will continue after mitigating the daily order block. Now, Here, we're still looking at the same AUD CAD chart. We're on the 5 minute and we just tapped into the daily order block. Now, in order to get involved, here, we're still in the same AUD CAD chart. We're in the 5 minute. Now, in order to engage in this price action, we want to see bearish price action. We're coming off a daily order block. Now, first things first, we want to get involved with time and price. So this is where we could utilize our kill zones. Here. Now, let's talk about what's happening here. So we have the daily order block. We come off the daily order block, show signs of bearish price action. Perfect. Now, as we want to get engaged, we want time on our side. As we're trading with AUD CAD, we want to be trading within the Asian kill zone. Here, Asia kill zone starts 8 p.m. What is happening? Our order flow is bullish at the current given time. However, our bias is bearish. Our higher time frame is saying bearish. Now, how can we actually get involved? After Asia kill zone starts, we want to see bearish order flow. Here we see bullish fair value gaps stop holding, and now we see bearish fair value gaps holding. As a bearish fair value gap holds, it will most likely lead to an order block being made. Here we have an order block. The low gets broken. The low gets broken. We want to continue our bearish order flow from this order block. Any price action above has no meaning within our. We do not want to see price action come above this. Why? Because it has respected our bearish price action. Coming above this will show us that price may be bullish and we're in the wrong side of the market. So in this case, we can actually take a short position. Our stop loss will be invalidating our trade idea, which will be this high. And you'll be targeting a liquidity point, a fixed RR, or opposing PD array in a higher time frame. Here, would you say you ran 5R, just like that? And that is a trade where you have time and price, where we're just utilizing order blocks only, right? I'll keep this here. I'll keep that there. Now, let's still talk about order blocks, right? So again, in a bearish argument, every up candle becomes an order block, right? So here we could have this as an order block. Here we could have this as an order block. You can even use the whole body. That's perfectly fine. Here you could, since we have a lack of fair value gaps from this high to this low, we do not want to get involved in this sort of price action yet. We want to see a clear continuation of a bearish PD array. So we're talking, we want to see price respect a order block like this or fair value gap, and we want to enter off the next creation of the PD array. So we're talking the next creation of a order block or a fair value gap. Here we take the highs, so we take liquidity, and now we're just waiting on fair value gaps to form. Right here we get another shorting opportunity, just like that. Our stop loss can be above the swing high, and our target, we'll say around 3R for this trade. These are just examples, right? I'll move that there. Now, we're still looking at price. We still say we missed an entry, whatever. Here we have another entry, right here. So, we see price again here, since we could use the low of the candle, and that low is overlapping with a fair value gap. You could just have a limit in this area right here. Our stop loss was above this swing high. You could have had it above this, whatever fits your psychology. Now, after we respect this, let's look at this piece of price action. Here we have a fair value gap right here, and we also have a body of this order block overlapping with this fair value gap, right? So now essentially if you're trading this, your stop loss becomes above the swing high, and what are you targeting? 2, 3, 5R, whatever. It's very simple to use. It's very simple to utilize order blocks. A lot of you guys are using it as supply and demand zones, right? So you're looking at order blocks like this, calling them valid, even though price has already made its high up here. You're assuming price will give you some sort of reaction here. But the misconception is using them as supply and demand zone. Using them as structure. We use them as order flow, and we use them as current price action now.